Ace Nation, if buying a rental property sight unseen scares you, then you're doing something wrong, and we're going to help you fix that today by giving you some pro tips straight out of our back pocket that our business has learned over 500, 100% sight unseen deals. Never seen them, never will. Not when we purchased them, not when we owned them, not when we sold them. Our investors never seen them. We're going to give you tips straight out of the trenches that'll make it not so scary for you, right? We're going to make buying sight unseen unscary, because really all there is to this thing is a bunch of uncertainty when you have less control, right? And there's a way to filter that uncertainty out and to give you more control over your process, even though you aren't there to see, feel, touch your property, manage your manager, shake someone's hand, right? Everyone's buying rental property sight unseen. And there's a couple reasons for it. Really, there's only two reasons. Number one is you got more options. Imagine if you were investing in the stock market, but the stock market limited you to only 10 different stocks that you could choose from because of where you lived. Well, you probably wouldn't be as successful. You wouldn't have as much range available to you, right? Even index funds wouldn't be available to you because they had stocks that weren't part of your 10. So why would you restrict yourself to just that? Well, real estate had previously been restrictive to just that, to locales. But the advent of better technology and better, just, I guess, services available to you, because the industry is slow to adopt things like new tech, right, have opened up your range of options, meaning that you could invest depending on adjustments to your strategy, diversification in your portfolio, and changes in the market, the amount of money that you have. There's a lot of things that you have more control over by having more options. And the other reason people invest out of state is because it forces efficiency, right? Because you're not just there, so you can't just go knock on the door. You can't just drive up to the property to check it out before you make an offer. It forces you to learn how to treat things like a business. So there's some good things that you get out of being a remote investor. But there's some bad things that it begets too, right? Because remoteness brings uncertainty into the equation. Your lack of control is something you have to learn to control. And we're going to give you some really good pro tips to control that today. I've got 8 different pro tips that all belong to 2 different categories that you're going to be able to use to look at a property that you've never seen, a city you've never been to, and go, all right, does this fit my model or not? So hang on for these before we actually give you these tips, and we're going to be quick today, I promise, and then we'll do some Q&A afterwards. But before we give you these tips, we got to give you some free stuff. So, weekly giveaway. If you're new to the lives, we give away a bunch of stuff from the Ace store every week. A bunch of cool little spreadsheets that I know all of you guys probably have all of them by now, right? But if you don't, or if you do have all of them, don't take a coupon code. Leave them for the people that don't. Hop on after this live. Look out for my stories. I'll be announcing a giveaway. You're going to use the coupon code I'm about to give you and the link that I'm about to post to get into the Ace store and jump on and download one of whatever 5 of the spreadsheet tools that we've got for real estate investors. The code is going to be unscary, because we're making this whole thing unscary for you. All lowercase, one word, UNSCARY. Now look, this code's not active right now, so don't hop off the live to try to go save $40 on something that you probably already bought. The code's going to be activated once this live is completed, reposted to Instagram, posted to a story. The following story is going to be an announcement that the giveaway is now active with a link. You can take that code unscary that I'm never going to say again, by the way. Stop putting it in the comments. You're ruining it for everybody else. Take that code, use it to pick up one of the free tools in the store. I'm going to give away 25 today. I do every Monday and every Friday. And look, if that coupon code slot is not there at checkout, right above that Pay Now button, that means you're either too early or you're too late. All 25 have been redeemed. And a little disclaimer, the course, never a part of giveaways. It's too cheap at $495 for the massive amount of information you get. Everyone else out there charging thousands of dollars gives you like 4-hour courses, and you got an 8.5-hour dense real estate investor taught program for like a 1/10 of the price. And I actually have a funny story. So I was actually just on the phone. The reason I'm late for this live is because I was just on the phone with a client of mine who is not yet a client. He's been a prospective client for a while. And he's a popular musician. Recently had some songs that I heard at the pool party at my friend's house. That's kind of cool. He came on in the office. And he's been on our investor list for about a year and a half. Looking at properties, coming in, asking questions, just curious. And he never purchased. And he never jumped on and signed up for properties either. He's just kind of been in this looking and thinking phase, right? Well, he bought the course last weekend, and he sent me a text earlier this week. I actually posted a screenshot of it, not with his name in there and all that stuff, because I'm private about that thing. So he took the course, binged it while he's out of the country on vacation over the past couple days, and he got through like half of it. And he told me today, hey, I want to put an offer on all 5 of those properties that you sent out, all cash. I'm like, what changed, man? You weren't ready for so long. He's like, well, what changed is I took your course, and I haven't even completed it. I haven't gotten to the part that teaches you how to acquire and like make decisions, but just like the fundamentals and background that you taught in the beginning gave me enough to evaluate these investments and be confident enough to say, I'm ready to do this. And that feeds into, so that's my pitch on the course, but that feeds into today's topic. We've got these 8 pro tips that are going to make you more confident to make a remote purchase, a rental property that you've never seen. And one of them is having a process and having the knowledge that you need. So we'll dig into that a little bit more. But if you feel uncertain, if you're lacking confidence to get in, one of the major reasons is because you don't really know enough to be able to make a confident purchase decision. Right? And that's why investing in a little bit of education, imagine a guy like him who makes a ton of money, probably more money than me, sticking 4 hours of his time into the first half of a course and going, oh, I'm ready to invest now. Worthwhile spending that $495. Anyways, let's get into our 8 pro tips for today. These are going to take the uncertainty out of buying remotely, which you need to remove it from buying remotely to be able to actually do it confidently. We use these tips all the time in our process to be able to continuously do this, because we would not have an efficient business if we couldn't buy remotely, right? But you are limited in the way you can do business if you want to do this and not be unsure, not take major risks. So let's take the risk out of it. The tips come in 2 different categories. These are 8 things that you need to be able to buy with more certainty if you're remote. The categories are pro tips about you and pro tips about the product. So yeah, half of it is about you as the investor. The other half is about selecting the right product, right? Or having the right business model. So tip number 1, this is a product tip, flat rents. You want to stay away from markets that have historically very, very low rent growth, or in a kind of midterm historical trend, very low rent growth, or lower than like the national average, significantly lower than the national average, because these properties will exhibit the biggest risk the investor really takes, and that is vacancy loss, right? When you have low rent growth, that means the demand for rentals is relatively low in the market that you operate in. And when the demand's low, that means tenants do not move in fast, they do not stay for very long. When they don't move in fast and when they don't stay for very long, what happens? And you're relying on, 1, your property being excellent, above market, outcompeting the other properties, and you don't want to have to outcompete to make money. You should be able to not have to work too hard to compete for your business to be viable, right? So that's number 1. That's the first problem with flat rents or low rents. The second problem is you start relying on the competence and execution of your manager a lot. And anyone who's got employees or delegated anything before knows that you don't want to work them at their limits. You want to work them way below their limits for them to be successful. When you test somebody or something at its limits frequently, it is going to inevitably fail you at a higher rate. So you want to be in a market where rent growth is strong. It could be a cash flow market. It doesn't have to be a super sexy boom market, but you have to have these rent increase trends that make you know your tenants are competing, or the tenant pool is competing for access to good properties, and not the opposite. Pro tip number 2, this one's about you. It's your money. A lot of people come to me and go, I'm just not sure what to do, what to buy, if I'm ready. And by the way, I got 20 grand to spend. And I'm like, dude, that's not even a down payment for a 100K house. What are you going to buy with that? Well, I was going to use like a hard money loan and find something and burr it and then refi after. I'm like, dude, no wonder you're not confident, because you're spending all your money. I wouldn't be confident either. If someone told me, yo, Ace, I don't have this amount of money. Let's jump on this investment opportunity and it's going to take $50 million, but it's a winning deal. I wouldn't be confident either. Why? Because my downside risk is too high. So you want to have an amount of money that's going to make it feel like your investment has limited downside risk. That's going to make you feel a lot more confident. When you go, I could afford to lose this, you're not going to be worried about the deal going south. You're going to be more likely to pull the trigger, even on an experimental basis, because there is an experimental component to every investment. Even investments that I make in cities that I've bought hundreds of properties in have some sliver of experimentation to the whole process. And I've got to be able to make a purchase that I feel is not going to put me under if that experiment fails. So you should always feel like you don't have too little money and you're not stretching to buy your asset, especially when you're buying it in a city you've never been to, that you're never going to go to, hopefully, and it's all going to be sight unseen. Tip number 3, this one's the product, a tip about the product. You don't want to jump in with a bunch of gut jobs when you're remote. Unless you have a super established team, a property that needs a lot of work is likely to also have a lot of stuff hidden underneath the walls per se, right? Now, what you're afraid of when you're not there to examine the property and monitor it over time is the property having characteristics that are going to cost you money, that are going to cost you a lot of repair, that are going to basically make it perform more poorly over time, right? And when a property is in bad shape, it's more likely to have surprise characteristics, surprise negative characteristics, than a property that is in rather good shape. Right? So obviously you want to toe the line, and it's going to be based on your experience level and your team and the amount of funds that you have. But taking on a complex project early on gives you a higher likelihood of surprises occurring, which are going to burn you on the whole remote buying experience and make you feel like, oh, if I was able to see this, it would have been more successful, when that's not really the truth. Number 4, this is a U-tip, criteria. What do I mean by criteria? You don't know what you want to buy. And when you don't know what you want to buy, then you are going to have a very hard time making a decision on a purchase. You see what I'm saying? You've got to have a set of criteria for financials, for tenants, for condition, for valuation, for the property story, for the market, for your operational team nearby. You got to have boxes to check. Right? And things that got to be in range. It's like a blood panel, right? Things are supposed to be in range. Well, if you don't define what you're actually testing for, how are you going to know if you fail the test or you pass the test, or if a property fails or passes the test? Invest some effort in determining exactly what your criteria need to be for a property, so that way you can confidently say this property does or does not meet them. Number 5, this is a product tip, redundance. What do I mean by redundance? Think about that. If you have only one property manager in a market that you're buying a property in that you've never been to, that you don't wholly understand yet, right? Then your chances of failure go through the roof. Through the roof. And your confidence in being able to succeed with that deal is going to plummet, right? Redundance gives you a sense of, I've got backups in case this doesn't work out. I've got alternatives. I've got a plan B and a plan C. So you want multiple property managers. You don't want to get into a market where you can't find more than one viable manager that's picked up the phone and has spoken to you about what they can do and signed off on your property that you're targeting. You want to be in a market that has 2, 3, maybe 4, at least 3 viable management options that you've engaged with. That way you know if number 1 fails, you can go to number 2, right? You don't want to be stuck with one that's not performing well and go, now this asset was a bad investment for me. Same with lenders, same with inspectors, same with insurance providers. If anyone goes, you know what, we can't do this for you anymore, you don't want to be out in the cold. Number 6, this is a U-tip, your information gathering process. Now, a lot of people get to the point where they have to shit or get off the pot, and they haven't actually learned everything they need to about the property. So they're likely to have things come up during due diligence, things come up during ownership, which is even worse than due diligence. But it's not good for you to discover things about the property during due diligence either. It begs the question, did I waste a bunch of time and effort and money getting to this phase in my deal analysis pipeline or my deal analysis process when I could have identified these things much earlier? And that becomes a matter of proper qualification. That's something I'm going to teach you guys in gory detail in this upcoming deal analysis masterclass. And it is something that I did introduce you to and teach you rather thoroughly in the Virtual Investor's Guide too, right? It's the order in which you gather key pieces of data, and the pieces of data you gather at every step along the way, they're going to allow you to not waste time on bad deals, get them out of the pipeline, confidently say no, and then spend more of your time. You want to hyper-focus, distill all of your opportunities down to the best ones that are worth your time. When you know how to do that, what you're going to see is a better pipeline of opportunities in front of you, or a better pool of opportunities, making you more confident in that first purchase. So the info gathering process, key. Qualification process, key. Number 7, this is a product pro tip, not a you pro tip, visibility. What do I mean? Well, if you're not going to be at the property, you still want to see the property. You want to feel like you have no idea what's going on, right? So what do you need? Well, you need, especially if the property like gets to the due diligence phase, you need an inspector that's going to give you a high level of information about the property itself in the report. They're going to give you verbal commentary that's going to be very thorough. They're going to give you a lot of extra photos on the side. The inspection report's standard photos, oftentimes, depending on the inspector, but oftentimes are not enough. You need a folder of detailed photos that show you not just the marginal and defective items, but all of the components of the property, every room, every wall, every angle of the exterior, multiple angles of the roof, all the mechanicals, the basement. You want to feel like you really are seeing this property. And if you've got a really good inspection company, you can get one that'll give you a 3D walkthrough, right? Like, you know how there's Matterport for properties that are for sale on Zillow, like nice single family homes, like primary residences. Well, there's a software called DocuSketch that one of our inspection companies uses that gives you a 3D interior rendering of the entire property in high resolution for these duplexes and triplexes and fourplexes, right? So that is extremely useful to us when we have access to it. When we don't have access to it, send us a folder with a bunch of photos. You need a manager that'll get on the phone with you during escrow and talk you through what you can expect with these tenants. You need to feel like you have the ability to replace everything you would have wanted to see with your own eyes without being there. That's what visibility means. Number 8, this is a U tip, and it's the ability to make decisions. And look, this is like the culmination of the criteria tip and the info gathering process, but you also need a process to evaluate and measure the property against its comparables, measure its financial performance against its comparables, and then adjust what you believe its true market value is based on all the information that you've collected against its comparables, right? And I've taught you guys how to do that millions of times in like a lot of the paid products, and even discussed it in some of these live sessions if you want to dig through, right? But you need a thorough process that's systematic, that's formulaic enough for you to say, okay, this is what I think this thing's worth in perfect condition based on a comparables approach. This is what I think this thing is worth in perfect financial condition based on an income approach. And now I'm going to make adjustments downwards based on money I have to spend, time and effort that I have to invest to get to that point, right? Uncertainty I'm absorbing with the property. So you've got to have a really evaluation process. You got to be better than the appraisers. So that is where mastery comes into play. And I'm not going to pitch it again, but I've taught you guys a thing or two about mastery when it comes to some of the paid products. And I've taught you a lot about it in old videos. So dig through these old lives, watch some of the YouTube videos that are really all about deal analysis, digging through inspection reports, financial analysis, how to make an offer. It is extremely important for you to be able to value a property with confidence before you've purchased it, before an appraiser goes out to it, because the appraiser is going to value it sometimes with some discrepancy from yours. And oftentimes an appraiser is going to value the property based on what you sign a contract at, right? Because they tend to, this is their cop-out, the market dictates the value. Useless, right? So 8 tips ran down one more time. Number 1, flat rents, you want rent growth, right? These are the tips that will help you feel more confident in buying a property you've never seen. Flat rents. Number 2, your money, you need to have enough of it. Tip number 3, gut jobs. Avoid them unless you already have a lot of confidence in the market and your process. Number 4, criteria. Establish yours and you'll be able to make better decisions. You'll be able to say if a property meets your standards or not. Number 5, redundance. You need plan Bs, backups on backups on backups for every person, for every plan that might fail. Number 6, your information gathering process. You need to be able to qualify, and you need to be able to qualify efficiently and with completion. Number 7, visibility. You need to feel like not seeing the property doesn't prevent you from seeing or knowing everything you would have if you did see the property. And number 8, the ability to make decisions. You need to be able to perform a virtual valuation with some level of confidence to be able to say, I'm paying the right price for this deal. So that's it. This was a dense, jam-packed session. Hopefully you got a lot out of it, and I'm gonna grab my coffee while you guys get ready for some Q&A. So hit me with some questions. I've got about 10 minutes to answer your questions. I want the good ones. Don't give me boring questions that I've answered a million times before. Give me questions that are insightful, that'll teach the whole crowd what they want to know about real estate investing. Yeah, thank you guys for coming. Let's see if I can scroll up and find anything. The paid products linked isn't working. So guys, there's a lot of issues with Instagram's links right now where you can click the link in someone's bio or in someone's story where they post a link, and it's going to take you right back to your own Instagram page. It's kind of weird. And when it first happened, like last week it started happening, I actually went to a bunch of other pages, like bigger pages than mine, like Bleacher Report and stuff like that, right? And shameless plug for Bleacher Report. They can hopefully send me maybe a goodie bag later. I went to their page and some other pages and clicked their link, and it did the same thing. It took me back to the Instagram page. So unfortunately, if any of my links, and it does it for like weird spurts, like 30 minutes at a time, and then it'll start working again. It'll come back. So if that kind of stuff starts happening to you, if you really want to get to the link, they're very simple to type in. Just go on your phone's browser, type it in, it'll work just fine. Go on your computer's browser, type it in, it'll work just fine. I'm trying to get around it. You can go to my TikTok page, it works there. You can go to like my YouTube or LinkedIn page, it'll work there. But yeah, unfortunately, Instagram's had some link issues lately. So do I recommend investing in RV parks? Look, RV parks are like every other investment. You've got to be able to make decisions around what makes my purchase a prudent investment for the state of the market, something that I can execute successfully, and something that outperforms other things in the space. All right, so I don't think an RV park is a bad investment now. I think it is very operator dependent, and I think it is very deal dependent. I know it's a bit of a cop-out, but that's the truth about them. Are you still at a minimum of 2% cap spread with rates for non-owner occupied at 7%? I don't find them to be 7%. I'm finding 7% at like portfolio loans. So like, private lenders, DSCR loans, stuff like that. They're around 7 right now, which they're supposed to be more expensive. I think the market's closer to 6. And the deals that I'm getting through my lender, they're closer to like between 5 and 5.5, right? And for like special clients, like relationship clients, or ones that have big deposit relationships, or ones that are buying a bunch of properties at once, they've even gotten under 5. I think I had one closed 2 weeks ago, maybe 3 weeks ago at 4.5. So even if you scale that up, there's stuff like right under 5 for those kind of clients. But yes, a 2% spread is still adequate. And look, the percent spread has something like, it's not directly linked to cap rate, where they don't move in linear proportion either direction, right? When the interest rates go up, unless the market is expected to go down, and that's an assessment that you will make, the cash flow will be reduced by the difference in cap rate spread. But the other sources of income, return on investment, are not necessarily reduced by interest rate. They're maybe reduced by changes in the market, or they may not be reduced, right? So you got to take into consideration, hey, after principal reduction and after net cash flow is minimized, am I getting something else out of this deal that makes it worth my while? And you got to look at your total liquidity and go, well, what do I think I'm going to do with this? You got to look at different markets and different asset classes. I'm identifying markets where rents have grown substantially in 2022, not just 2021, and their prices have been relatively flat. So I'm able to maintain like a pretty strong cap rate spread for myself and for my clients as well. It's all about pivoting into assets that are reacting to the market in a manner that's positive for you. Do I recommend fix and flips? It all depends on how good of a buyer you are, how good of a fixer you are, and how good of a seller you are. Right? It's really execution dependent. I'm flipping properties, not really with fixing them. I'm just kind of wholetailing properties. And we're making as big of spreads as ever because of our ability to acquire at a certain price and our ability to sell at a certain price based on meeting investors' criteria. If I have a lawyer, the lender and the seller, why do you need a realtor? Honestly, if you don't have a lawyer, then you still don't need a realtor, in my opinion. I mean, if you don't have any knowledge about what you're doing, yeah, maybe you need a realtor to guide you. I'd say go get some knowledge though, and don't just lean on the realtor for an investment decision. So yeah, I've never used a realtor. I don't like using realtors. Would you purchase a multi-unit without cash flow, covering mortgage, if rents aren't trending well? No, if rents aren't trending well, which kind of diminishes the equity argument, right? And if the property's not cash flowing well, and it's not covering its own mortgage, I would say you have alternatives that are going to offer you a more favorable outcome. You're going to be able to find properties in this marketplace where rents cover mortgage, there is going to be positive cash flow, or at least adequate cash flow, and you're going to have a stronger confidence in the rent trajectory in that particular market for that particular product. So yeah, don't settle, especially investing is all about alternatives, right? if you have an infinite amount of cash, you're going to have an assumption that something's going to outperform the cash over an extended period of time based on just the history of investing, right? And your decision to invest in one thing versus the other is 100% dependent on what the others are and how confident you are in your ability to perform on these things. How do you get to know specific neighborhoods in remote markets? First, you sniff test the rent growth, and I would say talking to local managers is extremely important. Seeing how many listings are on the market, extremely important. Talking to the local investors around there until you're familiar, really, or someone that knows the market very well, extremely important. You got to get these kind of like nuanced pieces of data that didn't come from Google, because honestly, the stuff on Google, the stuff on Rentometer, the stuff on PropStream, the stuff on CoStar even, it's all fucking garbage. Pardon me. It's complete garbage. Trust me, I've invested in all of those approaches, and I do not like the quality of data I get from any of them. And I've gotten really high quality information from real people in these markets who have had their hands on the properties, real operators, over some extended period of time. So I think that's your best plan. I'm not avoiding your question. Anyone who's, God, sorry, when people say stuff like that, thanks for avoiding my question, it's like, just, what do you expect from me, man? I'm here for free. What are you using to comp rents in your target area? Other listings. I had to think about that because all the areas we're in right now, we know rather well. So we can kind of eyeball rents, but pulling rent comps is just like pulling value comps. You look at something that's like top of market comparable. Let's say you have a 2-bedroom apartment in a certain city in Indiana, right? You find a top of market comparable or an average market comparable where it's like fully remodeled, but it's like the average size, 800 or 900 square foot 2-bedroom apartment, let's say. Then you look at yours and you make adjustments upwards and downwards based on the characteristics that your unit offers versus that one, the location of your unit, the level of remodel performed to your unit, the layout, the size of your unit, right? The street that your unit's located on, the exterior of the building. And then what you're gonna wanna do is you're going to want to use a bunch of comparable data points to say, hey, where's like a median that I feel I can conservatively land my property in based on how these other ones are performing out there. And then you just want to call someone and ask until you got it down. That's really important, is just calling the manager and going, hey, what can you get for this thing? Maybe calling 2 or 3 managers, which is why redundancy is really important. Having the ability to call multiple managers, some of them highball you, some of them lowball you. You want to pick a number based on what you think is reasonable, but not too low and not too optimistic, and then adjust that for what your unit is. I'll take one more question, and I got to bail, guys. Do I lean on wholesalers given how you avoid realtors? I get some deals from wholesalers for sure, just because like you guys have found us through social media, and then you go to my acquisitions reps and you send us deals, and we have the ability to monetize deals that wholesalers can't, because we have like a retail presence right in this space, and 25,000 person investor list. I think like 20,000 of them have 100,000 or more to spend. So wholesalers do bring deals to us, but I'd say it's like a minority of our deal flow. Most of it is direct marketing to seller, and we have our own acquisitions funnel. We've been hitting these sellers a bunch of different ways for 5 or 6 years, and they live in our pipeline, right? The same way, we have advantages because we have a list of emails and phone numbers of 25,000 investors, many of them with a large amount of capital, or at least a moderately large amount of capital. We've also got a big database of sellers that has opted in to engaging with us, right? And I think we have like 12 or 13 or 14,000 sellers in our Salesforce account, all of whom own product in markets that fit our product profile. So we follow up with them, we engage with them, we send them all kinds of different marketing, like next tier marketing, to be able to continue to convert them along the subsequent levels of our funnel. So yeah, we've been doing that for a while. We want to get more wholesalers bringing us deals. So if you're a wholesaler, bring us deals. That's all, y'all. I'm gonna bail out of here. I got some stuff to do, got some properties to sell, and I just want another cup of coffee, man. It's been a long week. Thank you for joining, folks. Giveaway coming soon. Look out for that. I'll see you next Friday.